Ladies and gentlemen, most people are recognizing 53,000 US dollars as a major resistance zone by now, but they're not necessarily recognizing it for what it is. It's a $1 trillion resistance, okay? 53K is where Bitcoin will cross above 1 trillion US dollars in market cap. It's not only that, it's an Ethereum resistance zone, it's a total cryptocurrency market cap resistance zone, it's a Bitcoin dominance 8-year-long resistance zone. This is a major level, and we are seeing inconsistencies in the TA, as proven by yesterday's video, at this level. We need to look into that as well. Funding rates, short-term charts, medium charts, macro charts, everything we can look at today, we're looking at. There's not a lot of clarity to be had about the next direction on Bitcoin, but I will be shedding light on the little bit of clarity that there is. Ladies and gentlemen, let's get into it. Guys, before we get into the content, let's check out a few things. It will take just a minute here. The VIP altcoin trading group on Telegram. You can find the description link below. It takes you to the information and results group. You can find all the info and, of course, the results, as I just said there, with a 78.52% win rate. That's where you can make money on altcoins. Go ahead and check out as well the BitGet and BingX exchanges if you need a new exchange to buy and sell cryptocurrency on. Obviously, you're trusting exchanges with your money. You're also paying them money in fees, so you want a good one. BingX is global non-KYC. BitGet is global KYC minus the USA and Canada. Both very low in trading fees. Both never been hacked before, big thing there as well. And then moving forward, going through to the Become a Trader 10-unit course by the Crypto Academy. You can find the website link in the description below. It teaches you everything you need to know about trading, market analysis, fundamental analysis. It's all there. Go ahead and check those links out. Let's get into the content today. Few things to cover today. I want to briefly look into the short-term price action. What's happened with Bitcoin? Why it's confusing right now? Funding rates are a big deal in my opinion at the moment. And then we're going to get into just the importance of the level we're facing right now from another perspective, from another scope, showing you that all the charts right now line up and all the charts say the same thing. Now, brief video today. I don't want to drag it out too long because nothing really has happened, okay? Bitcoin is still fighting the same resistance zone. We've still got this red box here at 53K. 53K is still incredibly important. But what we saw the other day, and what I saw in the last video, I outlined it very clearly in the last video, was a bullish pennant formation that was forming. Now, all of the surrounding TA was bearish, but the bullish pennant itself was bullish. So I was saying I was leaning bearish in that bullish pennant formation, but I was also saying that there is a high chance of volatility and fake out due to the funding rate. So we saw this bullish pennant formation break to the upside. We saw a invalidation wick there, a fake out wick. We came down, we faked out again. So a fake out to the upside and the downside. And then from that point, it wasn't even valid anymore because both lines were faked out above and below. They both lost their validity. And now the pennant formation just fell out of existence for the most part. Although right now we have come upwards and we've tested that pennant formation from the downside, rejected from it briefly. That could be indication that we're going to go further down on Bitcoin. But it also just could be a random coincidence retest. The problem is with Bitcoin right now is that none of these short-term structures are mattering. And they're not mattering for various reasons, okay? First and foremost, and I've discussed it so many times, I'll continue to discuss it because it's true. The ETF narrative and now reality. So what I mean by that is the ETFs was a narrative. It was a narrative back here from September all the way through to January. Now it's a reality because it actually exists. Okay, that is distorting price action. It's distorting price action because we have 10 to 15% of the spot trading volume on Bitcoin coming in from ETFs, which is pretty much 95%, not 95%, sorry. It's pretty much 80% buying and 20% selling. So we've got a massive, bullish skew to every single structure. The structures are being skewed bullish for the most part, but more importantly, they're being skewed in a volatile direction because we're seeing massive inflows of buying at certain hours of the day, which distorts certain structures which would work perfectly in a 24/7 market before. And just overall, the market is becoming harder and harder to navigate. That's the reality. It's becoming harder and harder to navigate due to these ETFs. On the short-term basis, on a macro level, on a medium-term level, it's still the same because we're still rejecting, for example, from a macro level. The fact we are rejecting or at least finding resistance from 53K is an indication that medium-term and long-term TA still works. But the short-term TA at this point, and it has been for months now, is a lost cause. And this is why, most traders, I'm talking about Bitcoin specifically here, not altcoins. Most traders I know, including myself, have not traded Bitcoin short-term pretty much at all, really. I mean, I've done a few trades on Bitcoin short term, but for the most part, I've been sticking to altcoins and medium term, long term swings for Bitcoin. I haven't traded Bitcoin short term since about October, which is when I first realized, okay, something dodgy is going on here. The TA is not working perfectly. And unfortunately, that hasn't resolved yet. And will it resolve? I think eventually it will. But at this point, the fact of the matter is, Bitcoin short term is just an absolute clown fiesta. It's a circus. It still is worth looking at because obviously it still works, okay, to an extent, because the fact that we can even identify a triangle there means that the triangle existed. So, look, the fact that you can identify support and resistance, the fact that you can identify triangles, the fact that you can identify structures means they still work, in quotations, but the fact of the matter is they're not reliable anymore. They're just indications of what's happening. They're indications of, okay, we're going to see a move within the end of this triangle. But as for the direction, we don't really know because the short-term TA is so unreliable at this point. They're just less useful than they were before. But that doesn't mean we should look. That doesn't mean we should stop looking at it. It just means it's hard to navigate. But right now, obviously, the same analysis still stands. We're at 53K, which is a major resistance zone. We can look into that more in a second. But mainly, it's the funding rates right now on Bitcoin. If we go to the 8-hour kind of funding rate history, we'll look at Ethereum briefly. Okay, we'll look into Bitcoin in a second, but we can see that from around September 11th, as I told you, Bitcoin has been heavily biased to upside moves, right? That's because the ETF narratives, first and foremost, just made it so that people did not sell, essentially, for months. And then the ETF reality in January made it so people, again, just continued this trend of just buying and not selling, really, for the most part, other than a 21% correction when it first came out, which was predicted perfectly. The fact of the matter is, funding rates have just been continuously very, very, very high. And what this means when you have very high funding rates or very low funding rates is you have a situation where you're going to see lots of liquidation wicks, lots of scam wicks to the upside or downside, very quick, very swift. Like what we saw, for example, yesterday. A very quick, very swift wick to the downside, very quick, very swift wick to the upside. None of which is really predictable by TA. It's predictable by external factors like funding rates. And these funding rates remain higher than usual. They remain in very high elevated positions. If you're looking back before October, before all this ETF madness started ramping up, you can see funding rates were basically equally positive, equally negative, very flat line. Now they're spiking upwards massively. It's not as heavy as it was back here in January and November, but it's still pretty major, pretty significant compared to regular price action with Bitcoin. The fact of the matter is, Bitcoin right now is prone to fake outs, prone to wicks. It's very difficult to determine short-term price action. We have to focus on medium and long-term. And then another problem arises. It's even from that perspective, it's difficult to predict what's going to happen with Bitcoin next. Because right now, what people don't understand, right? And maybe you do. Maybe I shouldn't say people don't understand it. But what I will say is a lot of people don't understand. This level is not just a random resistance level. This is like the equivalent of 32K. All right, you remember down here at 32K, this is the level that divided the bull market from the bear market. This orange lines I'm drawing here, around 30 to 32K. It was absolutely major. It took us, it took us from March all the way through to October. It took us 7 months to break that 32K level. 7 months of continuous rejections. No one really knew what was going to happen there. I personally would say I had a very high win rate in that price region, predicted the first correction, predicted the bottom perfectly here, predicted another top here. Most people were saying we're to go upwards again. And then when we went down for a double bottom in an M formation, I predicted no, that was the bottom this time because the ETF narrative was one of the reasons, a support line was one of the reasons we went upwards. So I was one of the few people, I'm not trying to boast, I'm just giving you the reality, along with Mega Whale Crypto and along with someone else who I can't quite name right now. He's Australian. He's on Crypto YouTube. The point is, we were amongst the few who really predicted that region pretty well. But the fact of the matter is, regardless of whether I did well in that region, I will say that region was very hard to navigate. And we're in a similar situation now because not only are we at a major resistance, 53K, it is the second most major resistance on this entire chart that I'm showing you right now. Right, 32K was probably a bit more major, a bit more strong, but right now 53K is the second most major resistance on this entire chart, which stems from 15K all the way up to 69. So it's a major zone, and with that, we can look at how it links up to other zones. For example, we have the same structure here. We have Bitcoin, 2 ascending support lines, and then a weekly chart resistance line, a weekly chart support line. Same thing with Ethereum. Weekly chart resistance line, weekly chart support line, 2 ascending support lines. Same thing with total cryptocurrency market cap. Weekly chart resistance line, weekly chart support line, 2 ascending support lines, and then Bitcoin dominance. Even Bitcoin dominance, right, is at a major resistance zone using this pink line that stems back from 2016, almost 8 years old. Okay, so all these charts are connected right now. They all tell you the same thing. Every single chart, Bitcoin, Ethereum, total cryptocurrency market cap, Bitcoin dominance, they're all at macro resistance. Okay, this is not a zone in which you can give a clear blanket, oh, it's going to go up or it's going to go down. It's just not that simple. This is not only that, by the way, but if we go to coin market cap and we go to market cap of Bitcoin, we can see 53K lines up with $1 trillion in Bitcoin market cap. You know, 1 trillion is obviously a huge psychological resistance. So not only is it a resistance zone via price, it's a resistance zone via market cap, for goodness sake. You know, this is huge here. And this is why it's been so important looking at this macro trend. I've looked at it over and over again now. You've probably seen it before if you watched this channel before. If you haven't, welcome to the channel, and I'll show you it right now. We have a macro trend on Bitcoin, which is not the 4-year cycle, okay? But it is part of the 4-year cycle to an extent. It does build up some of the underlying micro trends of the 4-year cycle. So to clarify, invalidating this trend would not invalidate the 4-year cycle, but it would be a dent in the armor, and it would not be a good thing to do for the 4-year cycle. It would not be healthy. But this macro trend shows us that in every single cycle so far, in all 3 of them, we've seen the same macro structure develop on Bitcoin. We've seen various lines form. For example, a horizontal yellow line that stems from the bear market dead cat bounce, okay, and we reject from it, and we reject from that yellow line. We see a pre-halving correction. Not only do we reject from the yellow line, we reject from the same level on the RSI as well, 67.9 on the RSI, meaning it's not a coincidence. We see a rejection here. It's part of this cyclical structure, and right now, we are edging above the horizontal yellow line, but we are still on top of the RSI line in the monthly chart. We have not closed below either, and so technically speaking, this could be a deviation. And if we close the monthly candle below 49K in 7 days, that could be an indication that we'll see, it will be an indication, but we'll see a pre-halving correction. But if Bitcoin closes the monthly candle over 49K or breaks 53K on, say, a daily candle, this macro trend will be breaking. Okay, and that will be a break of an 11-year macro trend and a sign of significant deviation from macro trends for Bitcoin, and potentially even an early sign, right, that the 4-year cycle would not be as reliable as it was last time this time. It wouldn't be an invalidation to it, okay, but it would be a sign that macro trends are no longer infallible. They're breaking this cycle, and that could lead to a super cycle or something similar for Bitcoin. Keyword is could, okay, but fact of the matter is, right now, nothing's confirmed. Right now, what do we have? We have a situation where Bitcoin, Ethereum, total cryptocurrency market cap, Bitcoin dominance, they're all at major resistance. Even the market cap is at 1 trillion. You know, you can't be getting too bullish here for that reason. You simply cannot be getting bullish at a market cap resistance and a price resistance across all the charts, essentially. This is not a zone in which you want to be entering longs, not a zone in which you want to be buying massive amounts, in my opinion, at all. This is a zone in which we want to be observing, recognizing that TA is not working as much as it usually does, observing, waiting, and seeing what happens. Right now, we are at macro resistance. The macro trend does suggest we go down. Is that macro trend reliable? Depends what you mean by reliable. The fact of the matter is the trend is your friend until it ends. That doesn't mean I'm necessarily predicting we're going to drop. I'm just observing what's happening in reality here. So we'll have to wait and see what happens. But this is a very major zone for sure. I understand this video is repeating a lot of information I've given out in the last few videos. Fact of the matter is, guys, just, you know, plain and simple, Bitcoin hasn't moved in price for 8 days. So it's very difficult to come up with unique content here, but I'm trying my best. So guys, thank you for watching. I hope you enjoyed. Leave a like, comment, subscribe, and I'll catch you in the next one. Cheers.